Hi there guys, hope you guys are doing great. In this quick video guys, please watch the video to the end because it's going to be very informative. If you've been battling with your trading, not understanding why your system isn't working, why you keep taking losses, why do you keep just battling in these markets and not actually taking any money out of it and just giving money back to the market. I just want to explain to you because I've just noticed, even myself lately, each week traders come to the market and they try and trade each session individually. Like they'll have their session indicator, this line up, and they'll be too zoomed in on the market. And they won't actually be looking at what's actually, why are these big moves happening? So why is there a reaction from there? Why is there a big reaction from here? They're basically they're too zoomed in and they're trying to trade each session individually, trying to trade each squiggle, each little move in the market, and they're not understanding why they're taking losses and why the market is moving the way it is. In this video, please guys, stay to the end because it's really going to help you. I'm going to explain to you why this is happening, and this will definitely help your trading and take it to the next level. So stay tuned, guys. It's the weekend here, and I just decided to make a quick video here on quite an interesting strategy that I've been using from time to time to catch good little moves in the market. 50 to 100 pips. Minimum like 30 pips. I've noticed that a lot of traders ignore the fact, like if you zoom out on your charts to say like the 4 hour, or even the 1 hour, but let's look at the 4 hour. A lot of traders will be in profit. For example, you'll enter over here, market will push up, you'll be nicely in profit, and then all of a sudden the market will go against you and you'll basically get stopped out at break even. A lot of traders actually don't realize why this is happening. Most traders are just focused on looking for the reversal. As price is moving down or going up, they're just looking for that reversal coming down. Or, when price is going down, they're looking for that reversal going up. But if you want to actually make money in these markets, you've got to actually think differently, in my opinion. Instead of having a strategy with indicators like over here, like I've shown you guys, instead of having all of that, take all of that off your charts and just keep trading like really simple, but think objectively about how you trade. So what I'm saying is, a lot of traders will be in profit and they'll be like, okay, why did the price reverse? If you just look at this basic move here, price pushed up and then it dropped, right? So if we look at why it dropped, we can see over here that it came up to a resistance looking left. This was once a support, now it's turned into a resistance. Right over here, it pushed down from here. This level right over here was a support, but it turned into a resistance. Now that's just the basic concept of it. You can also see over here, this was a resistance. This was a support. You can see over here, price just dropped. So all of these traders here were in profit, and this market just dropped. Okay, now basic support and resistance, you can see it, how the market reacts to it all over the place. Just these two levels that I've pointed out here. You can see how this market dropped from here, came back to it here a week or so later and dropped from it. Came back again here and dropped from it. A lot of traders are basically ignoring these key levels, these basic support and resistance levels. You can even see on a basic move like this, if you had just caught this, that's like a 300-point move. We just highlight this. We zoom into like the 15-minute time frame. We can see price came up to this level and basically just dropped from it. Now, if we're using a stochastic or something like that, we can see prices oversold. If we're using like bands, for example, you can see price shot out of the bands and then dropped. But even without using any indicators, you can just expect price to come to these levels and then and then react. You can even see our price broke above that level, came back, and then bounced from it. So if you're just trading basic support and resistance and just looking for simple moves based on support and resistance, you can see how it happens on literally every pair. Like if we just look at basically like this move over here, you can see this was a support level. Price came to it and reacted from it, right? You can see this move produced, if you're trading on a lower time frame, you can see that just that move alone is like 300 points. The point I'm trying to get at is if you wait for these levels to be reached again and you just take 30 pips or 50 pips from these moves. Look at this level, basic support and resistance level right over here. If we had this marked up, okay, we could have waited. Even if we just had this line here on our charts, you can see price came down to it, price took off, came down to this and just reacted exactly from this level. Now this doesn't mean we would have aimed to catch this whole move. What I'm saying is you just come in here and you see a good reaction from this level, you just scalp like 100 pips, 50 to 100 pips, and then you get out. 200 pips at the most. Because the thing is, you don't need much in the markets to actually make money. If we had this level marked up, you can see, okay, over here, we've got some major resistance coming from here. We've got a push down here. So this level here, we've got a push down here. And then we also got another push. If we had left this market alone, and we could have been at this point, we could have seen, okay, price is pushing up back to this resistance level. Check, we got a 1, 2, 3 pushes off the exact same level. It's so simple. Like, we just mark out a key level like this. Let's look at this level right here. Look for levels where there's been some major resistance or support. So you can see price is pushed up from this level. When price gets back to this level, look at what happened. Price bounced nearly 400 points. Came down to the level again, bounced another 500 or 600 points. You can just see it happening all the time. You just got to you just got to be patient and wait for these levels to actually be hit. Look at this level here. Got a bounce from that level and then basically a second bounce right over there. You just mark up your charts. You can look on any pair. On literally any pair, if you look left and you can see key levels or just draw up some lines on key levels where prices had a major reaction from. You can see right over here. Now just over the last 5 to 10 minutes while I've been talking, I've found literally like 10 trades or more, simple trades that you could have taken and made money off. Now, a simple level, we just wait for price to come back and you just scalp like 50 pips. You've got to trade, you've got to be patient as a trader and wait for the right opportunities. And when you get the opportunities, you mustn't be greedy and look for too much. All you need to do is take your piece of that move and then leave. Go look at another pair. I like to focus on one pair. I like to focus on the same pair. Just to keep it simple, just to keep trading less stressful. I don't like to, because the market is like a casino. There's a whole bunch of different games there. There's poker, there's slot machines, there's blackjack, all these different games. Each market is like a different game or a different slot machine that you go in, that you'll, like when you walk into a casino, you'll see all these different slot machines or all these different poker tables, roulette tables. So what I'm saying is, that's why I focus on one market. Now you can see over here, there was a reaction here. So you can see a reaction here. This was the first reaction. You see a second reaction and a third reaction just from those basic, just putting a line on your chart. Now, if we're looking at this current move right now, I mean, just remove this. You know, the next key level we can see is like right over here. You can see a reaction down from here. We can see one reaction here, reaction here. So we've got two reactions basically off. Well, let's just look at this. So we can see a price push down here. So we can see a reaction off there. So now we could drop down to the 15-minute time frame. You know, and we could wait for price to come back to this level. And then just look for a nice, if we see major rejection, now we can bring in our indicators. We can bring in indicators like the stochastic, or, you know, here's this thing here. You know, and you could wait for price to come up to these levels. And then you look for a stochastic divergence, you know, break above the 90 and break back in the 90 level. On the stochastic, you can see you could look for a burst or pop out on the envelope, followed by a big rejection candle. You know, and you could basically, even without that, you could just look for big rejection, like big engulfing candles, big pin bars, hammers, you know, big hammers going the other way, bear hammers and stuff like that. Because another thing that I want to talk about is basically, I just want to bring up a simple calculator here. So for example, if we just bring up a little basic calculator over here, a lot of traders think that you need to take hundreds or thousands of trades to actually be rich from trading. But let's just say, for example, we started with $500. And let's just say we're able to double our account on each trade. All right, so what we're doing is we're timesing that by 2. Yeah, how many trades would it take for us to actually make money from trading, to actually be financially free from trading? Okay, so I'm going to do this to the power of 12. So 500 to the power of 12, but I'm going to count as I do it. So 1, 2, 3, 4. You can see every time now we're actually doubling our account from each figure. So 4,000 we take to 8,000, 5, 6, 7, 8, 9, 10, 11. So basically 11 trades, starting from $500. If we doubled our account every time over just 11 trades, we'd literally make, starting from 500, we'd literally make $1 million. Let's just say we started with 500, and every time we did 50% on our account. So we times it by 1.5, which is 50%. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So if you had to do 50% on your account every time you took a trade, you're only 19 trades away from actually making $1 million. So if you say now you did 25% on each trade, but I'm just saying, even if you did 10% a week, or even 5% a week, you just got to, it's not going to take you a lot of trades to actually reach your financial goals. You just got to spread it out and have a trading plan. You know, if you did 5% a week, it will probably take you about 4 years to become a millionaire, or something, 3 to 4 years. But if you're more aggressive and you can do 10% a week, it's probably only going to take you about 2 years to actually, from $500 to be a millionaire. So by using a simple calculator and knowing, and just being patient and taking trades based off these levels with good risk to reward, and you know, just being patient at these levels and just looking for small moves in the market. You don't have to catch too much in the market. And if you just break it down into a trading plan and not try like trade every single move that you see in the market. That's, I mean, I've literally just from this, I've shown you guys like 10 to 15 trades just based off simple support and resistance. When it reaches these levels, you don't have to actually look for too much. Trading's all about being patient and not looking for too much, not being greedy. And just having a trading plan, having a plan to actually make money out of these markets. But this is quite an interesting way of trading, just by keeping trading simple, looking at support and resistance levels. Like if we look at gold, you can literally do it on any pair. If we look at this reaction right here, right? So if we just put a line here, we're on the 4-hour chart and we just scroll back. Now, why did price react from there? See, look, basic support. Look there, bang, price reacted because of this reaction. Now look over here at this area right over here. Look, basic support, price reacted from there. If we had like this level marked up here, let's look. Okay, there was a tiny bit of a reaction there. But if we had this level marked up over here, and see price came and literally tapped that level and then moved up. It happens all over. If we had this level marked up, we could have waited for price to just come to that level, even if it took 2 weeks. And you just scalp like 50 pips down. Look, it reacted. Look at this. It reacted from this level once, twice. Price broke below it, came back above, reacted to it again over here. Once, twice, reacted literally like 4 or 5 times just to this level. They have levels marked up. If we're looking at gold, you can see this is a key level right over here. This is quite a key level right over here. So just wait for price to reach these levels on the 4-hour time frame. Just trade based off those levels. If we look up here, we can see, like, look, it happens literally all the time. You can see a big bounce from this level. Price came back to this exact level. And let's just mark it up. Let's just mark it up. You can see over here. If we just come back to this level, we can see if you understood price action, you'd be like, okay, cool, price has reached this level. Now we can actually see a stochastic divergence. You can see, the stochastic wants to move up. We can see a big pin bar just below this level. They did a bit of a stop hunt down here, but then you can see, like, over 2,000 pips. I'm just trying to point out that trading doesn't have to be complicated. You can simplify your trading just by looking at key levels, support and resistance levels, just being patient for price to actually come back to those levels. Then use your indicators, price action, all those things together, and wait for your own confirmation to actually trade off those levels. But when you do trade off those levels, don't look for too much. Once you've made your million or your 2 million, then you can start looking for bigger moves and scale out of the trade. So you can wait for price to reach your 50 pips or 30 pips. Take half the trade off or 70% of the trade off and leave that 30%. Give that 30% a chance to run. I just hope this opened up your eyes a little bit. This is what I'm going to be focusing on more lately. Well, in the future, because I want to simplify my trading a bit more. And this is like as simple as you can get. You can see that I literally drew up like 20 different levels in literally like 15 minutes. I showed you guys, it's so not rocket science. You don't need to be a scientist, because how it works is price reacts to levels, in the past. It's just history repeats itself all the time in trading and, in these financial markets. If you bring it up on any pair, you'll see it. But that's just a quick little dive into the strategy. Maybe I'll talk about it more in the future. But I've given you guys the overall concept of it, and just hope you guys can roll with it, and maybe hopefully it's helped open up your mind a bit. And also with the calculator, those calculations that I showed you, it doesn't take long to actually make money from trading, as long as you have a trading plan and you execute the plan. You're literally 13 trades away, 12 trades away from being a millionaire. That's obviously if you're trading aggressively, but you can go as aggressively or less aggressively as you want. You could have an account that you try and flip. You put 500 in and you try to do 20% on each trade. But if you wait for key levels like this to be hit and you use leverage correctly, it's very difficult for you to not actually win those trades, because there's literally always a reaction off these levels. I hope that helped, guys. I'll catch you guys in the next one. I'm off. I got to go do some exercise and so on, and do some shopping. See you guys in the next one. Peace.